British business bankers helping small businesses in the UK access the finance they need to start up, scale, and more these days stay in the UK as well, fundamentally.
Since 2018, we've written more than £2 billion of finance to more than 70,000 businesses.
We would do our own public deal. That was the plan that we were heading towards before COVID hit.
We launched into the market the day before the missiles were launched into Iran. We thought we got the timing right. We didn't get it quite right.
The vast majority of businesses in the UK, 5 million of them, they just want to be resilient, stay ahead and hopefully grow. And that's where all of our delivery partner relationships with people like Propel are so important.
There's so much more, I think, than people would realise. Hello, everybody, and welcome. This is a really exciting day. This is episode 1 of our Propel Finance Podcast series, Making It Fly. And today we're in the heart of London at the British Business Bank offices. I'm delighted to be here with Bernie Skivington from the British Business Bank. Bernie, I'm going to let you say your full title because it was a bit long. And Mark Catton, I can remember that because he's our Chief Exec at Propel. So welcome, gentlemen. What we're going to do today is really just talk a bit more about the very long history that Propel has with the British Business Bank and how it came about. And I guess the difference it's made for us, which is, it's a really inspiring tale, I guess, for other lenders and, a journey that's still continuing. So, Bernie, get it right. You can tell us your full title. So
I'm the Managing Director of a team that we call the Origination and Relationship Management team. Sits within our banking arm of the bank. And my job is responsible for looking after all of our lender partners. We call them delivery partners. And we have around 120 of those on the banking side. So through those lenders, we distribute our programs and we achieve our desires of getting increased finance out there to small businesses that need to have access to finance.
Sounds like a busy job.
Yes, it can be.
And Mark, obviously, so Mark and I have worked together. In fact, Bernie, we worked together in a previous life many years ago, and we won't mention the year. And Mark and I did as well. So, Mark, you've been at Propel since 2018 now, and before that, a long history of banking in Barclays, RBS.
Yes, so Mark Catton, CEO of Propel, lead the team of 200 or so propellers, as we call them. Before that, Jules, as you highlighted, 20 odd years, mostly in the city, a couple of big banks running client divisions as well as product groups. And certainly Bernie and I used to be on the same side of the table, Bernie, many moons ago.
RBS?
Indeed.
You realise what a small world it is, don't you, when you come back round. So Bernie, take us back. Let's go back to begin with. How did it all start with the British Business Bank and actually Propel, or in our previous name, we were Henry Howard Finance, still in the same building in Newport. So tell us how it all started for you.
Well, I think we probably should just reflect on, the British Business Bank and when it started. So 2014, it was established, of course. And its mission back then, probably very much the same as it is today, which is helping small businesses in the UK access the finance they need to start up, scale, and more these days stay in the UK as well, fundamentally. We had two particularly key objectives for me that stood out. One was obviously to increase the supply of finance to small businesses, but the other was about diversifying the market as well. It was very much dominated by the larger banks, of course, post-financial crisis or pre-financial crisis. So we wanted to make sure we could bring through many more the new specialist banks, non-bank lenders, and also to diversify the products that they were able to access as well, including asset finance, of course. We had 3 programs at the start of the bank. The first was the Enterprise Finance Guarantee. That predates the bank, been a core scheme for the government for many years. People remember the Small Firms Loan Guarantee Scheme, of course. And we had 2 new programs, both under the inaugural umbrella. The first one was the Enable Guarantee Program. So that was focused on really helping the new specialist banks who were capital constrained in terms of the lending that they could provide to smaller businesses. So the guarantee was to help that capital inefficiency and allow them to increase their lending. And the third one is the Enable Funding Program, which is relevant obviously to Propel. That was designed because we had identified a number of smaller lenders, particularly non-bank lenders, that were struggling to access cost-effective funding, and particularly through the capital markets, where you needed to be a lender of scale to be able to do that. So by creating a securitization warehouse type structure, we were able to give these smaller lenders access to that capital funding, cost-efficient funding, much earlier than they would have otherwise, and hence enabled them to grow. We had identified particularly a need in the asset finance world. There were many smaller lenders that were just not able to grow. And Henry Howard Finance was one of those. It was particularly appealing because it was based in South Wales. So that was really interesting in terms of our devolved nation support, of course. And it was, again, 2014. So before the bank was even formally established, they were acquired or invested in by Cabot Square Capital, the private equity firm, of course, who still obviously owns them today. And I was just keen to get a meeting. We finally got an introduction and really went from there. I think just over a year later, we provided our first Enable funding facility to Henry Howard Finance, about £51 million facility, and we saw multiple increases in the next 5 years. It changed its name to Propel, of course, in 2019. And I think Propel, from memory, has provided something like £600 million of finance across 19,000 businesses through the Enable funding program particularly.
Well done for getting all your numbers right. But so back over to Mark. I mean, that's really interesting to kind of know it came back from those days. So Mark, when you came in 2018, it feels like, and I was only about a year behind you, but we've changed significantly. Do you want to come back? So you came in, the BBB were already supporting via Enable, which was, I think, probably our only funding line at the time, was it?
Yeah, pretty much. And if I remember rightly, Bernie, when those conversations first started, back in sort of 15, 16, when that first line was put in place by the British Business Bank at just over £50 million, I think the leases that the old Henry Howard business had transacted at that point was about £10 million.
Yeah.
So £50 million in that context was a big deal for the company. Since 2018, we've written more than £2 billion of finance to more than 70 or supporting more than 70,000 businesses. So that I guess is just part of that sort of backstory. So Enable was our first sort of entree into institutional finance, essentially, which made pretty much everything else possible for us. So if we wind the clock back to 18 and my arrival, working with Cabot at the time, of course we spent a little bit of time just working out what it is that we want to focus on. A few things to sort of sort out back in the day as well. But we sort of figured out quite quickly that we wanted to build and scale in a very attractive, important politically as well as economically, sort of SME equipment finance ecosystem. That was the plan sort of back in 2018. And we pretty much stuck to that all the way through. Our view was that we are better served scaling and supporting that ecosystem through big partnerships. So rather than a direct to customer model, we will try and sort of penetrate that sort of 5 million UK SMEs through big partnerships. But our view was that to be successful in doing that, we sort of need to operate to call it institutional standards. Most of us in the company come out of big corporates or come out of big big banks, and you need that sort of experience and that skill set to be able to navigate big banks, big funders, big partnerships successfully. So, we focused back at the time on building I would say like four key competencies, sort of four main sort of investment areas for us. The first of those was into the what we call the operating infrastructure, so everything, sort of risk and data and finance and operations. One of my early conversations with your colleagues, Bernie, again back in 2018, 19, in fact, when we were scaling from 50 million to 100 million quite quickly, was along the lines of we have a bit more work to do, according to the British Business Bank, around things like data and documentation and reporting. And it was entirely valid, completely growing pains. But unless we're collecting that experience with the British Business Bank at the time, there's no way that we can make the foray, into sort of institutional lending for the likes of Citi and Bank of America and others, which is what we've done successfully. So we were investing into sort of four key pillars. One was the operating infrastructure. One was essentially the funding platform, so everything on and off balance sheet for a whole bag of reasons. Thirdly was into the technology platform, so investing into the sort of SaaS propeller platform as we call it, and that was quite a courageous sort of ballsy investment that we made at the time, and we spent broadly £15 million on that platform since 2019. And then fourthly, into the distribution. So, we can't be successful in winning these big bank partnerships and these big manufacturer partnerships, without the infrastructure to support them. So we invested into four key areas. And of course, the first foray into big partnerships was with Barclays. That launched just coming out of COVID, actually, in 2021. I don't think they would mind us saying that, we've written more than £500 million of finance for their customers, thousands of Barclays customers, over that period. And the most recent partnership announcement was with Santander quite recently. Some PR that we put out there together just a few weeks ago. And of course, we made the Apple partnership announcement in the sort of second half of last year. So some key investment choices that we made, very much focused on a partner ecosystem, and we can see us staying true to that plan.
And I think, Bernie, we kind of talk about starting at the 51 million. It was interesting when I look at the figures that you gave me, how it's kind of, it went up and up and up. Then we did the first private securitization, and it obviously went back down again. And then most recently, Mark will come on to, we've done the first public securitization, and it's obviously that's changed it again. But I think that what struck me with that is it being a real, partnership, as in you were there for us when we needed you, but with the flexibility of being able to sort of, change shape as things were changing our side. Is that the whole sort of ethos of the Enable funding program, that it's not a kind of fixed shape? It's there to move as the goals and the objectives and the other things move along with the lenders that you work with?
I think we've learnt from it a lot over the years, of course. When we first established it, we kind of had an understanding of how it would work, that we would always talk about bringing a lender delivery partner on board, Propel and a number of others that we've brought into the program, and that they would be with us for a period of time. The whole program is structured as what we call a multi-originator program. So you could never really achieve a public securitization through Enable funding itself, just with one lender. But if you are able to combine them, aggregate them together, you get the scale that you could do that, of course. But each lender within that, it's bespoke. You design their arrangement through the scheme in entirely around how the lender operates, its size, and what its ambitions are, of course. But I think what we have learned along the way is that you don't actually get to a point where actually the lender just doesn't need you anymore. We always imagine we would open a bottle of champagne when, in this case, Mark would say, we don't need you anymore. I'm not sure we could keep up with Propel anyway if we were still there, the pace of going. But it's been great that we've remained important to that transition and growth as well. And that we have learned that we've needed to just be there as the lender has got more familiar with and more embedded with its senior financing from the commercial financial institutions, we've been able to just gradually ease back ourselves. And that's important to us because it was only ever meant as a temporary or bridging funding type arrangement. We would always want the money back to provide to other lenders. So it's been really successful. And look, we haven't talked about the public deal at all, but even that, we realised how important that would be just to carry on that relationship with Propel.
Let's go into that now, Mark, because I think this was a first for the British Business Bank as well. So do you want to talk about the public securitisation that we concluded probably within the last month?
Yeah, and maybe just before that, Bernie, the reality is that the British Business Bank has grown with Propel. So, I think at one point we were either the largest or one of the largest enabled delivery partners. Back in 2022, I think we were borrowing broadly £300 million or so, and it was a really important proof point that we could then stand up a sort of a commercial funding deal with Citibank at the time. So having had a number of years of experience with the British Business Bank, demonstrating quality of data and processes and reporting, we had a level of maturity around the business and around the portfolio that we were able then to move into the wholesale markets, the private wholesale markets successfully. So we termed out part of the BBB facility into Citi at the time, and did that subsequently then with Bank of America. So really important proof points for us, and it's through those proof points that we build capability and credibility into the public markets. So we think we've been ready to enter the public markets for a couple of years now. We made some choices probably back in 2024 to step into a bank forward flow facility. We did that for the first time. That was a £500 million facility for Propel. So we sort of prioritised that at the time, but felt that we were ready in terms of seasoning of the data, seasoning of the private warehouse relationships with major banks to allow us to access the public markets. So we made the decision last summer. We started the planning in September of last year for our debut public issue. We appointed the banks and the advisors in October, and we had a week by week plan that took us into the public markets in the middle of March, and we didn't miss a heartbeat over that sort of 5 or 6 months. And the facts are this is a £306 million sort of debut deal for us. It carries what is called the STS kite mark, which is like a gold standard of public issuance, which I think is a first in equipment finance in Europe, and certainly debut issuers don't ordinarily find themselves with that sort of kite mark or standing from the market. But 306 million across 7 different notes, so A to G notes, plus residual certificates, plus the X notes. So we were financing, all the way up the capital stack. We launched that in the early part of February, and that was for what is called the equity notes. Closed that or got commitments on that through the back end of February, and then on the 27th of February, we launched the debt notes into the market. The day before the missiles were launched into Iran. So we thought we got the timing right. We didn't get it quite right. But I think because of the work that we'd done through non-deal roadshows and the time that we spent with the rating agencies and the ratings that we secured and the time that we spent with a number of bank and other investors, and it gave us the confidence to push ahead with that. So we closed that deal successfully. That was three times oversubscribed. So we had orders at one point of just over £1 billion into a £300 million issue, with very favourable pricing for us. That the relationship with the BBB continues insofar as I guess two things at least. Bernie, one, the British Business Bank bought into the notes, and it was important for us that the first time you'd done that, yes. So getting sort of commitments from major institutions as we were building the book was important for us. So the BBB had an important role to play. And then, of course, we've continued through the Enable program in sort of resetting that facility size, which I think we signed the paperwork on that only just a few days ago. So.
And we'll link in with this. We obviously did, or George Smith from Capital Markets did the interview with Michael Strevens from the BBB and our very own Ian Wills talking about the deal. But how was that for you, Bernie? So the first time the BBB participating in a public securitisation and, allows you to continue on with, I guess, two sides from the Enable and within that, the Propel journey. What did that feel like to take part in that, and I guess give us your support as well at that important time?
Yeah. More than you'd probably imagine, actually, because just reflecting back on the Enable funding program, it was always designed that it would go to what we call a second phase, under which, as I mentioned earlier, you would aggregate the various facilities of some, if not all, of the lenders in the program, and we would do our own public deal. That was the plan that we were heading towards before COVID hit. So we had to abandon it, of course, at that point, because we became rather busy doing some other things, of course. So the ambition right from 2012, 2013, when we were planning this, and the ABS markets in the UK for small businesses, they just didn't exist really. It was great to see one or two deals that have happened along the way. But because we hadn't done that transaction ourselves, that was quite disappointing for me personally, and I've always had the ambition that we would get to it. But actually to see not the public, but the private securitizations before that from Propel and others has just been brilliant. And it just shows the change in the markets and the perception of SME lending, and particularly in asset finance, such that being able to get this first public deal away by Propel, and there will be others, I'm sure, that will follow, is just brilliant. I'm really pleased with it. I remember sitting in our own investment committee not long before we confirmed that we would make the investment, just discussing it around the executive of the bank and just saying, look, this is a really important step for us. And really, it's just a slight change in direction of what we probably would have done anyway, either through a guarantee structure or whatever commitment we would have had into that public transaction ourselves. Maybe we don't need to do that anymore. But if we can achieve this kind of continued investment, continue to support these partnerships, I think that's a massive win.
And I love that. And I love, Mark, that it's, Propel and, with yourself and Ian Wills, thinking about doing things differently, which I think is inspiring quite a lot of other asset finance lenders in a marketplace that was really pretty staid for quite a long time. It was either the banks or the brokers, wasn't it? And, looking at the new partnerships and things. Mark, what about, obviously there's a lot of stakeholders, the British Business Bank, really important stakeholder, Cabot, our ultimate owners have, been there on a really long journey with us. Do you want to talk a little bit about that and the part that's played? I guess, that's been probably quite unusual for a lender of our size, that we've had quite, or complete stability in terms of, ownership.
And we built that stakeholder base over quite an extended period. Clearly the business bank was a very early stakeholder into Propel through the funding lines. We had 17 new investors come into our public issue, Jules, for example. So we've got a whole new raft of sort of stakeholders that we have relationships with and work with. Cabot made their investment back in 2014, so a very patient investor. Having been around private equity for a long time, it's important that a few things are aligned. Certainly values are aligned, and strategy is aligned, and outcome is aligned. So, with Cabot, we have a very supportive stakeholder. They've been around the UK FS market, financial services market, for 20 plus years. So they're pretty well connected into that sort of UK SME sort of ecosystem. Super supportive. They don't bring an operator perspective to Propel. So many private equity companies, Bernie, as you know, would deploy operating management or operating executive into the business. They don't do that with Propel. So Cabot are sort of fully supportive of management and strategy, and have always been there when we've made the big calls. So choices that we've made on funding, on partnerships, investing into the technology, they've always been super supportive of what we've been trying to do.
I think I would add to that actually what's been important to us is that we've been able to have a relationship with Cabot Square Capital as well. I mean, Propel is not the only transaction that we've done with them, of course, but I think, as Mark was saying, we have worked or tried to work with other PA firms previously. It's not always been, it's not always worked out because we've not been able to get that kind of relationship going with them. And then you kind of see that operational, I'm not going to say interference, but in the way that works, it's not always conducive to how we want to do things, but it's worked really well with Cabot.
And Bernie, there's clearly a huge amount going on within the British Business Bank. What does the future look like? I guess you're always wanting to do more, ultimately to help more SMEs, to help more lenders like Propel grow. But what does the sort of the short and medium term future look like for the British Business Bank?
I think it's a good question, and it comes at a really important time. We mentioned that the bank was only established in 2014, so I would suggest it's still relatively young. And the bank has had huge success already. I think we're supporting something like 26 billion of finance already across thousands and thousands of businesses in the UK, predominantly businesses that are much smaller, just can't get access to finance. But we're now facing into a bit of a step change. We started, I was in a team of 12 people at the start. We're now over 600 people. And we absolutely have the government's commitment for the future of the bank as an economic development bank, driving economic growth, of course. So what's changed? We have restructured the bank a little bit. So we had a number of different kind of subsidiaries and silos of products previously. We're now much cleaner. We've got a banking arm and an investment arm. Banking pretty much for our debt programs, investment for equity, venture capital funds, etc. In addition to that, the government had its spending review, which got a lot of airtime at the time. We were wondering, other kind of government-owned institutions, what we would get out of that. Well, it was a huge commitment. We've got 25.6 billion of financial capacity now. That's a 2/3 step up on where we were previously, and it will allow us to deploy something like £2.5 billion of extra support each year, around to 2030 when the next review, of course. We've got a 5-year strategic plan that really kind of sets out that trajectory and that mission going forward. That extra financial capacity is intended to lock, based on our numbers, something like another 26 billion of private capital as well, which is phenomenal, and it will include an additional 10 billion of capacity for our guarantee programs. So as well as the enabled funding programs, of course, we have the enabled guarantees, and those are important because whilst they were focused on bank capital efficiency previously, they've evolved over the years that we can now support non-bank lenders. So in the same way we can provide funding directly, where we've got lenders that actually already have access to institutional capital, and we can perhaps increase that or provide better terms, better advance rates, etc. We can now use the enabled guarantee, and we've done so quite effectively with a number of different banks predominantly, to provide that additional funding to many more lenders. We also provide startup loans. We're looking to deploy 85,000 new startup loans over the next 5 years. And also at the other end, we've got this British Growth Partnership where we're going to access pension monies in the UK. Only a small amount, but it will have such an impact that we've never been able to have before. And unicorns. We've seen so many businesses lost to the States, where we help them early on, but we just don't keep that support going. So, we'll be focusing more on our venture capital support, direct investments, and pretty big size tickets, up to 100 million at a time potentially. The vast majority of businesses in the UK, 5 million of them, they just want to be resilient, stay ahead and hopefully grow. And that's where all of our delivery partner relationships with people like Propel are so important, because we can't do anything on our own. We have to operate through the market and through these delivery partners. So all of our programs that we've been talking about will continue to be key programs. They'll continue to have a key importance for us. And the great thing for me is that we have been able to evolve them so much over the last 10, 11 years. We've got so much flexibility now to deliver solutions for lenders, not a choice of programs. And that's what we will be focusing on.
There's so much more, I think, than people would realise. And Mark, I guess same question for you. So, we've been on a hell of a journey. I came in 2019 with you, and we've changed. New partnerships, more partnerships coming. We're still the fastest growth. I think we're going to be the fastest growth asset finance company over the last 5 years. When that comes out, what does the future look like for Propel?
Much more of the same, I think, across a couple of key pillars, Jules. So, having invested in, the team, the technology, the funding platform, the various sort of distribution channels, we have some amazing partners who we will continue to deliver brilliantly for. So, executing on that partnership program is super, super important for us. We have new partners signed up. We haven't yet announced, but we have a number of...
Don't say it, you'll be in trouble if you shoot ahead of my official PR.
We have a number of contracts in place, and we're sort of putting the final touches to some new partner onboarding. So very, very focused on that partner ecosystem and making sure that we're supporting that brilliantly, supporting the SMEs that sit within those huge franchises. I think is number one. Number two, we're seeing this, I have seen and continue to see this emergence of this embedded finance, this B2B SME embedded finance ecosystem, following, we think a similar trend to what we've seen in consumer, in B2C over the last sort of 7, 8, 9, 10 years. So the conversations that we are having with the major equipment manufacturers, it is very clear to us that they are very focused on this SMB segment within the UK and more broadly. They're very focused on investing into the e-commerce that supports this segment, having invested heavily into consumer e-com in the last sort of five plus years. And they're very focused on, call it circular supply chain, and repurposing technology devices for future use. So a subscription finance model that sits within that OEM ecosystem, making it affordable for SMEs to acquire new devices, giving them choices through that sort of life cycle, upgrading the equipment, adding to the equipment, recycling the equipment at end of term is super important for these major technology manufacturers. And we're in those conversations, we're in those partnerships, and we expect to see that grow quite materially, we think, over the next 3 years.
And that's just been phenomenal to watch, isn't it? And I think, for that kind of lower ticket spend, just to be able to do it, end to end, less than 5 minutes, all within the online process is just, phenomenal. So, Bernie, back over to you. I think we're probably running out of time here. Any final comments? Obviously, hearing your story and also the Propel journey, they're intertwined. I feel like we've kind of gone from being in nursery to getting our first job with you holding our hand all the way through. And it's a phenomenal partnership, from every side. I think clearly built on a lot of trust, a lot of honesty, a lot of real understanding of each other's plans and where we're going. Any final comments from you to end the podcast?
Yeah, look, I think for me personally, and the team that I have, relationships are so important to us. It's really important that they work well. That you have that transparency and trust with each other. It's great hearing Mark just talking about some of the evolutions there. And the important thing for the bank is that it has to continue to be listening to the market. We have to be on our toes all the time. It's no good us trying to stand still with the programs and products that we've got. They have got to continue to evolve also. Things like servitization, embedded finance, subscription finance. These are all things that are challenges for us. But we are already thinking about that and thinking, how do we continue to evolve ourselves so that we can continue to keep pace with the market and the lenders that we work with? If we don't, we will very quickly become out of date and redundant. So I don't think that's the case. I think we're doing a great job, and I look forward to the future.
Thank you, Bernie. And Mark, what does the future hold? Do you think we're doing a good job of that? There's lots more to go. Clearly, banks that have not had products for a while are now, partnering with us, and hopefully a lot more of those partnerships to come, maybe with others as well.
I think we're doing I think we're doing a fair job, Bernie. But all of that comes with the ability to grow and support hundreds of thousands of SMEs. Only comes with the confidence and support of long-term funders, and to have the privilege, Bernie, of your support and the British Business Bank support for 10, 12 years is incredible, and an amazing stepping stone for us into where we are today.
And I think, Bernie, I've learned a lot as well. There's a lot more going on than we realise. Thank you, gentlemen. So that is the end. That is the first of our Making It Fly podcasts. Watch out. We've got some really interesting conversations coming up. We've got some unusual ones, and you might see me on a location in June doing another podcast that will be slightly surprising, but keep watching. This will be available on our YouTube channel, and Bernie will make sure that you can get it out on your channels. And thank you very much.
Thanks, Jules. Thanks, Mark.